Just because it's a bear market does not mean there aren't plenty opportunities out there that we can profit from. As I'm about to show you, this bear market rally that we're in has caused a lot of altcoins to pump, a lot of which we've taken some good profits on as we're anticipating the next leg down. So I just wanted to make this video to shed some light, give my updated view of the markets, and just put everything into perspective, because a lot of people think that the hype and the mania is back with this guy saying Bitcoin's gonna go to 1 million because the banking system's gonna fail tomorrow. I just want to give a logical perspective for you to hear so you can make the best decisions for you and your future and your family's future. So in this video, I'm going to be giving my updated view of the markets, as well as why I'm doubling down on my shorts and my strategy for doing so. And that involves making passive income while I'm shorting, as we talked about before. I'm going to go over my yield farming strategy and how I plan to profit. We're going to look at some charts. We're going to look at equities. We're going to look at crypto. And I'm going to give you my whole macro perspective on the equity markets and how I think it's going to affect crypto. I'm going to tell you some of the projects that I took profit on and why. And then I'm going to tell you which projects I plan on buying after there's a correction and why. If you like this video, I ask that you please consider subscribing, as we're trying to grow this channel and get this message out to the world. And it's the best way you can support the channel. This is definitely a video you won't want to miss. So before we get into it, I do have to say that this is not to be taken as financial advice. Please talk to your financial advisor before making any investment decisions. This video is for your education purposes only, and as always, DYOR, do your own research. So without further ado, let's get into the content. So if we just go on Gecko and scroll down, we can see that a lot of these plays are in the green from a 7-day perspective. We got Solana up 22%, Chainlink up 10%, 13%, 5%, 26%. Now, look at all this green. Okay, why is this happening? So let's start off with some charts, okay? So we're gonna start off with the S&P. I obviously still believe that the crypto market is correlated with the stock market. So when the stock market pumps, crypto is gonna pump, and vice versa on the downside. And we saw that on every pump and dump that's happened throughout this entire bear market that we've been in for a little over a year now. So we can see that we're on the monthly chart here. For the past half year or so, the market's been consolidating, but it's been up for the most part. But I think we still have a ways down to go. We have the S&P treating this area as resistance, and every time it gets up here, it drops down, and crypto usually falls with it. But the market's still in the downtrend. If we look at the Dow, the Dow has been holding up relatively better compared to the other indexes because it's like defensive stocks. People want to get into the top 30 because they feel like it's going to shield them from downside risk, but the Dow can drop as well, as we can see here on the chart. But even the Dow has been treating this area here as resistance. Now it's frankly turned the 200-day moving average into resistance. Whenever it's on top of it, we're usually in a bull market, but once it starts to get on the bottom like it has been lately, and now it's just hovering over the top trying to stay in this channel, we know what the story has been. Same thing, if you go to the NASDAQ here, we've been consolidating over here a bit, but in an environment where interest rates are high, and like I said in my previous video, I think the Federal Reserve is going to do one more rate hike for 25 bips in May. I could be wrong. And then I think they're going to pause, right? And like I showed you, when the Federal Reserve pauses or when they pivot, that's when we see the carnage actually happen. The market always bottoms after that throughout history. So why would this time be any different? Especially with everything that's happening globally with the war in Ukraine and all the money we printed from the pandemic. And another thing to consider, from a GDP standpoint, we are in a recession, but we have not went through a proper recession, in my opinion. What I mean by that is we have not really seen the earnings recession that is due. The shortage in chips and Apple computer sales dropping and just all this stuff, eventually that stuff's gonna catch up. These companies can't just keep buying back their own stock. Like I said, Apple's in the middle of the largest stock buyback in history. Let's go to the Apple chart, and this is really gonna hit it home. We can see that Apple has been in a downtrend since January of last year. So a little more than a year we've been in a bear market. And we can see every time Apple gets to the tip of this channel, more or less, it likes to drop every single time. And every single time it comes up, it doesn't come up as high as the previous time. And now we're seeing that again. I don't know why, but for some reason we're hovering at the top a little longer this time, but like I like to say, the longer the base, the higher the chase. That's the same thing for the upside as to the downside. Apple holds most of the weight in the S&P 500. So when Apple drops, what do you think is going to happen to the rest of the S&P? And then once that happens, what do you think is going to happen to the crypto market? It's going to keep going down as well. And like I've been saying for the past few months, I do think crypto has one more leg down. Let's keep going. We have Amazon pumping a little bit here. We have Google pumping, bear market rally. It goes down, comes up a little bit, drops, goes up a little bit, drops. I think we're going to see that same thing. And same thing with Meta. Like we saw this huge drop and now we're seeing this huge pump. And in an environment where interest rates are constantly rising or even being just kept high, it is very unlikely that this is the start of a bull market. Another thing to take into account here is the extremely large amounts of layoffs that we've been seeing by companies in the NASDAQ, the Googles, the Facebooks, the Amazons. Once companies do layoffs, and they're not innovating to cut costs because their debt is increasing, and eventually they're going to run out of people to lay off. They're going to run out of options. So the only thing left to happen is for the stock to continue down. Like we need to have a proper recession. And with earnings dropping and shortages happening and everything, if I had to guess, we're not too far from it. We just have to be patient. Let's look at Bitcoin. We saw Bitcoin drop with the stock market here pretty much. And now we're seeing Bitcoin rally. We're sitting at a $30,000 Bitcoin. And this has been a strong level of support and resistance. You can see it was resistance throughout the bull market. And now we've been dropping and we're coming up to test this as resistance. Right? So it went from support, dropped down, tested as resistance. What do you think is going to happen next? You see momentum drying up. Like even if we go down to the daily chart a little bit, you see this, how this rise up. Like imagine you're sitting on a roller coaster. If you don't have a seatbelt on this, you're going to fall out. Like this is such a steep uptrend. Like look at the aggressive buying happening. Look at the volume. You see how high the buying volume is here and even the selling volume. Like look at how high the bars are. And now we come down to here and we have this rally. Look at from this point right here, January 7th to this point where we are right now, and look at how much less the buying volume is. That tells a lot of things. That tells me that this is a distribution, and a lot of the institutions and the large players are just constantly selling off their Bitcoin little by little so that the market doesn't think, we're in a bear market, just so they can sustain those prices so they can sell their bags at high prices. And then what happens is people think that the bull market is back on. We get to a strong level of support like 30,000 and we see volume dropping. And the momentum here, like you notice how steep this is and how steep this is, but this one is more going up at an angle. It tells you momentum is dying off. And in my honest opinion, worst case scenario, I think we get to a 13K Bitcoin because this was the last major area of support if we go back to 2019. Everything else is literally no man's land. Best case, I think we're at least going to test the previous lows and come back to 15. Or at the very, very, very least, we're going to come back down to 20K and just test the bottom of this channel. But I think for the remainder of the year, we're probably going to consolidate within this channel. We may have one more just like crazy leg down and come back in the channel where we're just consolidating. And then I think we're going to bottom in June, like I said in my last video. And then I think institutions are going to start buying in July in anticipation of the halving and in anticipation of the next election. And whoever gets in is going to also determine a lot of what will happen as well. Same thing with ETH here. If we look at Ethereum, we're seeing the same thing play out. I think we're seeing Ethereum pump because the Shanghai update was successful. So now, even if they did no other updates, it will still be able to function as is for as long as it's around, according to what Vitalik said. But obviously, they still want to keep making it better, which I applaud. But even with ETH, we're seeing this huge pump. And look at the volume from bottom to top from this area. You see the volume this is like the top, but in this bull market, which we were actually in, look at how much the volume is. So we're seeing ETH pump. I'm still shorting ETH and Bitcoin, like I said, and it is time to double down, in my opinion, because now we reach levels that we have not reached since last May, right? This area used to serve as a support zone, but now it's coming up to retest it as resistance. And I say retest because it already tested as resistance right here. Now we're coming up here again. What happened? It dropped. And if the stock market and Apple and these major equity plays start to drop, what do you think is going to happen? Well, crypto is going to drop as well. In my opinion, this is a very high conviction short. and I don't mind sitting in it as long as I have to, because like I've been showing you guys, we're earning passive income just sitting in the position, and we're earning it in an asset that has already done like a 30 or 40x, and we're going to get into that a bit later. We look at the total crypto market cap. We can see that the market's been consolidating inside of this channel. This used to be support. You know, we came up, retested as support, boom. Then we broke support, came up and retested it as resistance here. I know it didn't hit the red line, but I like to look at this as a zone. It's never going to be an exact point. And now here we are again, retesting this as resistance while also retesting our 62 EMA as resistance as well. That's an even higher conviction short. What do we think is going to happen as we're at the top of this channel? I think we have to go down and retest the bottom at the very least, or maybe even a little lower. Like we've already retested the 2017 level. So I think at the very least, we'll come back down and retest into this channel. Another chart here. This is Bitcoin's market cap dominance versus the entire crypto market. Every time Bitcoin dominance got to the top of this channel, we saw it drop. And now here we are at the top of the channel again in an environment where the Fed is raising interest rates and money is being sucked out of the system. I'm reading this really good book called Market Wizards. A lot of people consider it the best investing book of all time. This guy interviewed the top traders. It came out in like the 1980s. Another thing they talk about in this book is that if you can go against panic or euphoria, right now we're in euphoria because people are excited to see the green. Once you go against that and you can just stick it out, most of the time you're right. And that's how some of the richest investors of our time have made money. It's no secret that 3% of people hold 97% of the money. So if you go with the 97% of people who are investing, you're gonna be wrong. Ray Dalio also said the same thing. In order to be a good investor, you have to be willing to bet against the consensus and be right. And Ray Dalio runs the largest hedge fund in the world. He's managing at the beginning of the year, I think it was 101 billion. If I am great, it's because I stand on the shoulders of giants. You know, people have been investing before us for years, and there are methods that have already been proven. So I'm just trying to learn from them and do the same thing, right? Everyone is so excited. All these influencers on YouTube trying to get you to buy their Bybit referral link to buy Bitcoin so you can get liquidated and they can make fees. Like whenever that kind of euphoria is happening and people think like, oh, the bull market's back, that's when you need to start taking profits. And when everyone think it's all over and crypto's not going to come back and everything's in the red, that's when you double down and buy. Okay, so now let's go into my yield farming and my shorting strategy, and I'm going to show you guys exactly what I'm doing here. So my yield farming strategy for ETH is as follows. If you look at these two red lines, it's between 1850 and 1390, give or take. As soon as price enters that zone, right now I'm in 100% USDC, so I provided liquidity out of range to the upside, which means as it goes down, it's gonna be buying me ETH as well as paying me trading fees on a block by block basis when people are trading in that particular pool. So I do think we'll get to a $900 ETH again. I really hope we do. And as price gets to the bottom of this range, I'm just gonna take it all out, take out all my ETH and my fees. I'm gonna use my USDC to buy that dip in ETH, and I'm just gonna sit on it until it goes back up. Super simple. I don't have to be there. I don't have to worry about a limit order. I don't have to pay fees. I'm just getting paid to buy the dip. And in regards to my shorting strategy, I just plan on liquidating 20 to 25% of my short as we get down to previous levels of support. So I doubled down on it at around 2,000. Once we get back down to 1,700, I'm gonna take out 25%, and then I'm just gonna keep taking profits as we get down to the lower end of this channel, like just dollar cost averaging out of my short. Same thing for Bitcoin here. As we start to get to the bottom of this channel, I'm just gonna be dollar cost averaging out of the market. Depending on how fast and violently things drop when it does, that'll determine how fast and violently I'll take profits. Like if we have another one of these numbers, I'm gonna just probably liquidate most of my short. And if we go over to Radiant, I'll kind of show you guys here. This part is really important. For the collateral, I'll use mostly USDC, but I also have some ETH here as collateral. And I had more, but when it went to 2,000, I took out half of the ETH I had in collateral and turned that into USDC and posited that as collateral because, like I said, I think ETH's gonna come back down. Okay, so if had I used ETH as my collateral and ETH drops, now the purpose of my short gets defeated. So I use USDC as collateral, I'll borrow Bitcoin, and I'll sell that Bitcoin for USDC, deposit it, borrow more Bitcoin, sell it for USDC, deposit again. This is called looping. And this allows me to use leverage. You can't short like this in TradFi because, it's just not possible. Like, this is decentralized shorting. So you can protect yourself on the upside by having the asset that you're shorting as collateral as well. So if the market's going against you, hey, at least the value of your collateral is rising as well. And then once you get to a health factor of 1, then you get liquidated. So I like to keep mine no lower than 1.3, but I just keep it at like 1.5, 1.6 just so that I'm safe. And by doing this, as you can see, these are all the yields I'm getting paid. This blue one is the yield I'm getting paid in Radiant, and this one up here is the yield I'm getting paid in whatever that asset is. So as you can see here, I'm getting charged 10% to borrow, but I'm making 15% APR as well as all of this yield. Same thing here. I'm getting charged 7% to borrow, but I'm getting paid 14% APR. And if I go to my manage tab, it shows me everything. I'll come in and claim these rewards like every couple days or so, just so that the value of my collateral can keep rising. And then I'll lock my Radiant rewards. I'll switch between 1, 3, 6, and 12 months. So eventually I'll get to a point where I'm constantly taking out profits. And the longer you lock it, the higher your APR. As you can see, if you lock it for 12, which some I do, you get 100% APR and so on and so forth. The opportunities in crypto are endless. They really are. So now let's talk about some of the projects that I took profits on. So one of those projects is Radiant. So I was making videos of Radiant pretty much since they launched. We bought a lot at 1 cent and it's just been mooning. It looks like we have a triple top here. Every time it gets around this area, it likes to go back down, and it seems like 30 cents is going to be current support level, but I do think we'll drop back down to at least 20 cents. If the price gets back in this channel, especially towards the bottom, I'm going to buy a lot more. Radiant just had a successful launch to Binance, and their new tokenomics with daily liquidity provisioning, as I just told you, and how you have to lock tokens up. Now you have to make it so that in order to get paid a yield on the assets you deposit as collateral, you have to put ETH and Radiant in a liquidity pool. 20% is Ethereum, so you don't have to worry about impermanent loss too much. And I'm okay with that. And now their tokenomics are a lot more solid. And I believe that's why part of the reason why the price has been going up, along with the successful migration to BNB. But they're solving a huge problem. But I took a lot of profits on this just because I think we're going to come back down here. And I do think Radiant will drop when and if ETH and Bitcoin drop when the stock market drops. I already told you guys I took some profits on ETH and I wasn't holding any Bitcoin, even though in hindsight I wish I would have, but it's okay. Still made plenty of profits here. Another project that we took a lot of profits on is Radix. So I made a video on Radix and I'll put that in the description here, but I think they are going to be one of the top layer ones in the future. Basically, they figured out a way to solve the blockchain trilemma, which is speed, decentralization, security. You have to pick two. They figured out a way to get all three, supposedly. They've been working on this technology for the past 10 years, and they essentially made it so that you have more efficient code. Like right now with ETH, the programming language is Solidity. Developers spend 10% of their time building, 90% of their time making sure that the code is safe, because they treat everything as a smart contract. Whenever a smart contract talks to another one, it is a chance for a vulnerability to be exploited. They have an asset-oriented programming language, which means they don't treat everything as a smart contract. They put assets in buckets, and more importantly, their programming language is more simple. So if you read their white paper, they'll show that when you build Uniswap on Ethereum, it's thousands of lines of code. But on Radix, you can build the same app with 80 to 90% less of the code, and it's more secure. So I've pretty much just been buying this since way up here, to be honest with you. But I've been buying a lot below this yellow line, and out of nowhere, the other day, price jumped from $3 to $8. So we took a lot of profits on Radix. Another project we took profits on is Arbitrum. Look at this chart. All the Arbitrum that we got was for free because of the airdrop that I told you guys about months ago. So hopefully you guys got it as well. If not, there will be others, and I'll be making a video on that later on this week. But when the airdrop came out, we saw Arbitrum just drop and drop, and now it looks like we found a new level of support. Only time will tell, but I took some profits on that because it's free money and because it just had this meteoric rise. And I think Arbitrum will drop with the rest of the market once the stock market drops. Okay, so now moving forward, what am I looking to buy after the market dips? I'm gonna get into some Bitcoin. I'm gonna get into some ETH. And once I exit my shorts, depending on how the market's looking, I want to get into a leveraged long position using Radiant or an Aave. And I'm going to be buying a F ton of Radix. Other than cash, Radix is the largest holding in my portfolio, and I'm gonna show you guys why. And if you haven't already, definitely watch the video I made on Radix. It's the only deep dive I've done on a layer 1, and it's a big reason. I really believe they're gonna change the game. So I wanna show you guys some metrics here. First thing is, they've had 57% growth in XRD accounts, which is their ticker, through the bear market, right? People don't give a shit what's happening in a bear market, especially on a protocol where their main net isn't live yet. They have a test net live, and they've been, slowly but surely just releasing more and more stuff, and people are taking interest in it in a time where market sentiment is really, really low. These are things you want to look for, not even just in a bear market. In a bull market, this stuff is good. They're growing like this in a bear market. So they're seeing their transaction volume grow, they're seeing their accounts grow, and most importantly, they have 8.5 thousand developers that are building in crypto. I can't overstate how important this is. When you're building a layer 1, you want to build it to attract the developers, because it's going to be the developers who build protocols for retail to then come on and use. It's the tech stack. You have the protocol, you have developers, you have retail. With a more efficient and secure programming language, that's going to lead to better apps to be built for more people to come on and use, which is going to drive the token value up. And they didn't take on they just raised another $10 million, okay? But before that, no VC capital, all of their tokens are unlocked. You're not gonna have to worry about some firm like dumping a huge amount of tokens on the market. Even cooler is they are planning to launch Babylon, which is their main net, in July of this year. It might be a little bit after, because in tech stuff always gets delayed, but as soon as the market corrects, I'm gonna be loading up on as much Radix as I can. And then I want to show you my yield farm that I'm doing with Radix as well. So we look at here, this is Radix and Ethereum pulled together. I'm getting 49% APR. If we go down, you can see I've been in this position for 375 days. So for over a year, these purple lines are my ranges. Whenever price gets outside of the range to the upside or to the downside, I'm no longer making passive income. As you can see here, literally has not went out of range once. It almost did down here, but now when they raised that $10 million and they had their event, I think people are waking up to it, and now it's back even. Okay, so far with current prices, made around 15 grand for doing absolutely nothing. And that's the power of combining yield farming and trading. Like, you can yield farm something for a year, like you saw that I just did. I was literally in that pool for over a year. I was taking you get paid in the two assets that you're in the pool. So in this case, I was getting paid in Ethereum and Radix. I would take the Ethereum because I'm accumulating ETH in other pools. Take the Ethereum, use it to buy Radix, send it to another wallet, and constantly doing that every week. Just buying Radix, send it to another wallet. Now Radix just went up over 100%. I was able to take profits on that and sell it. And now I'm going to wait for the market to go back down and get into another yield farm. So you can literally have your money, yield farm with it, take the money and use it to trade. When your trade goes in the green, you take profits and use those profits to yield farm. It's just like a cycle. It's a beautiful cycle. So I'll be putting out another video later on this week on what I think the next narrative is that's going to kick off another mini bull market. But in addition to Bitcoin, ETH, and Radix, if you want to know what else I'm buying when the market goes down, you'll have to click the link in the description to apply to our Discord at Know It Alls. We're only letting a few people in. And if you like this video, I strongly, again, ask you to subscribe. But with that, I would like to conclude this video. I thank you everyone who tuned in. I love every single one of you. Stay strong in this bear market. Thank you for watching, and I'll see you in the next video.